Tracking their words from all their songs. I don't hear how I sound.
Welcome to Looking at the Markets with David Modell. Wednesday is going to be a hugely important day for the financial markets and the economy, so I'm going to tell you what's going to happen on Wednesday. I want you to watch really carefully for that. Also, toward the end of this video, I'll give you 2 stock ideas for a high inflation environment. Here is an example of why you don't have to believe what the Federal Reserve tells you. As you may recall, Jerome Powell and the Federal Reserve told us that, or suggested that, inflation would be transitory. Well, that was quite a while ago, and of course it's not transitory. In the English language, transitory typically means that something is going to come and go quickly. It's going to pass quickly. So when inflation really started to get out of control, Jerome Powell tried to backpedal. He said, quote, "We tend to use transitory to mean that it won't leave a permanent mark in the form of higher inflation. I think it's probably a good time to retire that word and try to explain more clearly what we mean." Well, Mr. Powell, maybe you shouldn't have used that word in the first place. And now he's trying to say, well, let's not use that word. Well, he's the one who brought it up. Also, now in this quote at least, he was trying to change the definition, or his definition, of transitory, meaning, well, inflation just won't be permanent, or the effects of inflation won't be permanent. Okay, well, yeah, even in the 1970s, when there was horrendous inflation for a long time, eventually inflation went back down, sure. But that doesn't mean that inflation, persistent inflation, doesn't leave really horrendous effects on the economy and on Americans in general. It's like a tax on everybody, really. So it's tragic, and it's showing up in the numbers in a number of ways. Food prices, fuel prices, and here's another example, average monthly car loan payments. Get this. The average U.S. car loan payment for a new car, $686. It's unbelievable. And then even for a used car, $554 per month, average U.S. monthly car payment. People can't even afford used cars hardly anymore. So, yeah, you don't have to believe what the Fed says. They told or suggested to people that inflation would be transitory. That turned out to be not true at all by any reasonable definition of transitory. Then they tried to change the definition of transitory. So right now, when the Fed or the government, when they try to imply that, hey, maybe we won't have a recession, maybe everything will be fine with a soft landing and not a hard landing, you don't have to believe them. You can think for yourself, and you can just use the data. You can see what's right in front of you instead of believing the rhetoric. And so last week we had a very important print for the unemployment rate, which I know it's not really accurate, is it? 3.6% unemployment rate leaves out a lot of people who really are unemployed. But let's say if we take it at face value, unemployment rate 3.6%. Let's say we choose to believe that. All right, well, what that means is that it will embolden the Federal Reserve to be aggressive with interest rate hikes. They'll look at that and they'll think that the economy is healthy enough that it can handle aggressive interest rate hikes. So that was a pretty important print there, the unemployment print from the Bureau of Labor Statistics last week. But there's another important number coming out, and it is the CPI, Consumer Price Index, for June, year over year, and that is coming out this Wednesday. And so I really want you to pay attention to that number and adjust your investing or trading strategy accordingly. If there's a very high print, then you might want to lighten up on certain investments or trades. And if it's unusually low or unexpectedly low, then maybe it might be time to start scaling into certain investments. And I'll give you 2 ideas very soon. But the previous CPI print was 8.6%, which is very high. And apparently the experts are expecting it to go even higher, to 8.8%. And so if it is there, If it's that or higher, that would even further cause or induce the Federal Reserve to be aggressive with interest rate hikes, because then the Fed would think, okay, yeah, we really need to get going to tamp down inflation. And so that could be bad for stocks generally, such as the S&P 500, Dow Jones, NASDAQ, that type of thing, stock market indexes. It could be very tough on stocks if the Federal Reserve has to really get aggressive with interest rate hikes. And so a higher than expected or even 8.8% CPI print could do that, along with the 3.6% unemployment. Now, what if it's unusually low, the CPI print for June, coming up Wednesday? What if it's in the 7s or even in the 6s, something like that? Well, that might mean that the Federal Reserve could back off of interest rate hikes soon, and then we might feel more comfortable scaling in to stocks, that type of thing. So it really is, I don't know if it's make or break, but it really is a very significant data point coming out on Wednesday. So please pay attention to that. Be aware. All right. So what are two possibilities for a high inflation environment? Well, I'm saying Costco, COST stock, and Sam's Club, but that's owned by Walmart, so WMT stock. Those two I'm looking at very carefully. Those can do well during inflation because, as you can see in this little mini chart here, depending on where you go, you can save on gasoline. And that doesn't mean I'm recommending Costco or Sam's Club or anything like that. You can get gasoline wherever you choose to. There's no endorsement here, but I think that it's possible that a lot of American consumers will start going to Costco and Sam's Club to fill up on gasoline if inflation gets worse or even just stays the same. A lot of people are probably doing that already. So these could be good stock portfolio additions. Scale in carefully if you're going to do this. And better yet, wait until Wednesday to make any decision like that. And always have an exit strategy. And make your own decisions. Do your own due diligence, as I always say. So those are a couple of ideas that could do better than certain other stocks during a high inflation environment. All right. But the main point here is you don't have to believe everything you hear from the government and from the central bankers, because they don't necessarily have your best interests and my best interests in mind. So be careful out there, folks. Thank you for watching and listening. I will talk to you again very soon.
Tracking